Hello and welcome to the Business Standard Morning Show. I'm Veenu Sandhu. It's the 1st of December 2023 and here are the questions we will be answering today. What do the good Q2 GDP numbers tell us? What lessons does the Silkyara tunnel fiasco teach? Why are investors betting big on IPOs? And what made Henry Kissinger important? GDP data for the second quarter of financial year 2024 is out. Kasturi Akhil crunches the numbers and speaks to industry experts for a clear picture. Let's listen in.
Looking at the momentum of economic activity, looking at a few early data points which have come in, a few early indicators, I can say that the second quarter GDP number, as and when it is released at the end of November, in all probability will surprise everyone on the upside.
Clearly, RBI Governor Shaktikanta Das foresaw it. Speaking at Business Standards BFSI Summit on October 31, Governor Das had said that there was a surprise in store. And on the evening of 30th November, when the National Statistical Office came out with a fresh set of macroeconomic data, most analysts were indeed surprised. India's gross domestic product or GDP for the second quarter of financial year 2023-24 grew by an impressive 7.6% year-on-year. It was a tad lower than the 7.8% GDP recorded in the first quarter, but higher than the 5.4% growth rate recorded in the same quarter last year. This takes the first half GDP growth to a robust 7.7%. The July-September quarter GDP number was also way above the Monetary Policy Committee's projection of 6.5%. The surprise was largely led by the manufacturing and construction sector. The highest growth was registered in the manufacturing sector. It surged to a 9-quarter high of 13.9% in Q2, up from 4.7% in Q1 of FY24. This was followed by the construction industry that recorded 13.3% growth in Q2 as against 7.9% in Q1 of the current financial year.
I would say that it also has come as a big surprise for us because we were looking at 6.5, 6.6%. So getting 100 basis points higher than expectations sounds too good to be true, but it is true. I think that's the important thing. Now, why has it come about? I would tend to think that the manufacturing sector is something which has given the biggest boost. And this can be supported by the fact that we have seen that corporate profitability has been very, very buoyant this particular quarter. Because of lower input costs, we have seen profits growth of over 20%. Second part is in terms of construction, we have seen a lot of buoyancy in terms of construction, given supported by the government capital expenditure, as well as the housing sector, which has done very well. So I think these two are the segments which have actually propped up. The others have sort of played a regular support role and ensured that we've gotten this number of 7.6%.
Unlike expectations, services growth contracted to 5.8% in the second quarter, the lowest number recorded since the first quarter of FY 2023. The growth in private final consumption expenditure, which is taken as a proxy for household consumption, slowed down to 3.13% in Q2 from 5.97% in the previous quarter. One of the reasons could be the slowdown in rural demand. The central bank has kept the Q3 GDP growth forecast at 6% and for the last quarter at 5.7%. For FY24, RBI has pegged India's GDP growth at 6.5%. In light of the Q2 print, how will growth fare in the second half and for the full financial year?
As economists, we always tend to be cautious in terms of our views. So I think even though we've gotten this number of 7.6% for this quarter, first quarter was 7.8%, we would tend to be a bit cautious. The reason being that we have seen that the Kharif output is supposed to be lower than what it was last year. This is something announced by the Ministry of Agriculture. So that is something which is going to play on in the third quarter. In the fourth quarter, we know as of now, the Rabi crop is not doing that well. The reservoir levels are down. So therefore, there could be an impact even on the final numbers for the Rabi crop. So agriculture is going to be one area which we'll have to look at more cautiously. We may not be getting that 3.5% growth, which we normally take for granted. Now, along with this, I would say that the other sectors would depend a lot upon what happens to consumption. That is both rural demand as well as urban demand. We have seen that urban demand has been good, but rural demand needs to catch on, and that's not something which we have seen happening. So this said, I think we can be confident that for the entire year, we would be in this region of 6.6%, maybe 6.7, 6.8, depending upon how these numbers turn out. It will be lower than last year of 7.2%, but definitely higher than the RBI projection of 6.5%, which they had for this year.
As of now, we are concerned that there will be an optical slowdown in growth prints in H2 compared to H1 because of a normalizing base, because of a bleak outlook for the agriculture sector and therefore rural demand, because of lower tailwinds from commodity prices, tepid global demand impulses, and also, we are concerned that the very high growth in government capex that we saw in H1 will slow down as we get closer to the general election, especially as we get closer to the model code of conduct. And for the month of October, in fact, Government of India's capex has contracted in YOY terms. So we do think that growth prints in H2 are going to be 5% or thereabout, so much lower than the 7.5% plus that we saw in H1. For the year as a whole, because Q2 surprised on the upside, we revised our growth estimate for FY24 to 6.2% from 6%.
And what will be the likely drivers and roadblocks in India's economic growth for FY24?
One clear roadblock is going to be agri and rural demand. So we already got a weak 1% ish print for agriculture for Q2. And Q3 is actually where the Kharif harvest comes to market. And looking at the advanced estimates that we've got, which are pointing to a contraction across all the major Kharif groups, hard to believe that we're going to get a print which is better than this for Q3. And capex I already talked about. I mean, I think that is clearly something that is going to see much lower growth prints from Government of India in particular in H2 as compared to H1. In terms of drivers, we do think that urban demand broadly is going to be sustaining. Like I said, there may be some timing mismatches between the end of the festive season and some amount of tempering that we see immediately after that. But on urban demand, more broadly, we remain constructive. It's rural demand where we are a little conservative. And for state governments, last year the base of their capex in H2 is actually very, very high. So on a big base, perhaps growth is going to slow down. Growth was very high at 50% for state government capex in H1, and we certainly don't expect that to be replicated in H2. But if they're even able to maintain about a 10% growth over what they had done in H2 of last year, then that is something that will still drive growth, even though the momentum is something that will moderate.
Experts agree that while the Indian economy may continue to see strong growth on the back of robust urban consumption, it is the rural demand that may slow down the growth momentum for the second half of the current financial year. A spike in prices driven by the El Nino phenomenon and a likely shortfall in Kharif production are seen affecting rural demand. A likely slowdown in government capital expenditure ahead of general elections is also seen moderating GDP growth in H2.
But growth sometimes pits people against the mighty nature, especially in hilly terrains where striking the right balance is crucial. A slip may put us on the downhill path. We recently saw this in Uttarakanshi, where a tunnel which was under construction caved in, trapping 41 workers. While the workers were rescued after 17 days and are safe now, what lessons does this fiasco teach us on crisis management? And how can we prevent such incidents from happening in the future? Abhijit Kumar and Tariq Ahmed find out.
The 41 workers trapped inside the Uttarakanshi tunnel have been finally rescued after 17 days of ordeal. After 7 p.m. on 28th of November, the first trapped worker, Vijay Horo, was wheeled out in a stretcher and the rest followed. All the workers were found fit and were airlifted to AIIMS Rishikesh for further medical attention. The rescue was a first of its kind. Multiple government agencies, PSUs, and federal authorities came together to make the mission a success. The National Disaster Response Force, State Disaster Response Force, National Disaster Management Authority, Indian Army, and other agencies were deployed at the site. But the tunnel collapse in the Himalayan state highlights the escalating risks of construction in this geologically sensitive region. Experts believe that there is a pressing need for critical assessment of such mountain projects, especially in the relatively young Himalayan region. Any proposed highway in India extending beyond 100 kilometers needs an environment clearance. The Char Dham project, which seeks to build all-weather roads connecting the Hindu holy towns of Gangotri, Yamunotri, Badrinath and Kedarnath, runs more than 900 kilometers. However, environmentalists have slammed the government for evading the necessary environment approvals by dividing the project into 53 sections, all of which were less than 100 kilometers. Experts have said that the Uttarkashi tunnel collapse revealed blatant violations of environmental norms, as no environmental impact assessment was conducted before the project commenced. A 2020 report titled Environmental Cost of the Char Dham Project had flagged concerns in road widening process and hill cutting, as well as inefficient disposal of debris. The report was put out by the Supreme Court appointed High Powered Committee, or HPC, which was appointed by the top court to suggest risk mitigation options. However, the committee's chairman Ravi Chopra had resigned in 2021, expressing disappointment over the brazen widening of roads in the Himalayas. So, what were the challenges in the Uttarkashi tunnel project?
The necessary geology of sheared rocks, which was to be taken into consideration while digging, that didn't happen. Secondly, the work was happening on a wrong road with design, and thirdly, there has been no environment impact assessment for this particular project. Because what happened was that in the rush of getting the project done fast, the Ministry of Road Transport divided the projects into small portions, each of which was less than 100 kilometers, so that they could bypass the EIA.
There are currently 29 under construction tunnels in the country, out of which 12 are being constructed in the sensitive zones of Himachal Pradesh and 6 in Jammu and Kashmir. Escape routes are a necessary safety measure during construction of tunnels, and those routes are to be built during the construction stages itself for the workers. But reports suggest that no escape route was built in the Silkyara tunnel, flouting an important safety measure. However, in a recent interaction with Business Standard, NDMA member Syed Atta Hasnain had hinted at a proposed guideline on tunnel rescue operations, where the issue of escape routes and other safety measures will be addressed. In major tunnel projects, the absence of a dedicated safety committee with either the NHAI or the BRO is also a concern. Without it, contractors resort to cost-cutting methods, endangering the safety of workers. And the geopolitical landscape has added another layer of complexity. Recent India-China border politics is driving rapid development of roads and tunnels in the Himalayas, often neglecting environmental consequences. Experts emphasize that while infrastructure is vital for national security, it should not come at the expense of the environment.
We gave our report. The title of the report was, we submitted this report to Supreme Court, that this stable environment is the best defense. Disaster-prone wider road would not serve the defense. The road can be narrower, smooth on the curve, so that all kind of defense vehicle can move easily, but it should be disaster resilient. in the Himalayas, it's very high chances that many places, if you deal a little casually, the landslide, the slope failure could become chronic. Now the approach which you can see all over the Chardham road is the disaster prone double lane paved shoulder road, which is 10-meter tarred. So with this, what we can see now, the entire project has become counterproductive.
So, what are the lessons to be learned from the Silkyara tunnel incident?
What we need is that we need to regulate the road width. We can always follow this cut and fill method, which is what was supposed to happen right from the beginning, instead of the cut and dumping method. For a larger road width, you need a lot of cutting. And all of that cutting generates a massive quantity of muck. And that muck gets deposited in the khads. So what we need to do is that we need to adopt a cut and fill approach. So you cut and then you fill. There is a backfilling. So the areas where they have already cut, amends can actually be done. We can do a lot of plantation and try to bind the soil.
The Uttarkashi tunnel collapse serves as a wake-up call, highlighting the negligence of government agencies and builders. Experts emphasize the importance of learning from past incidents and utilizing the wealth of expertise and research papers available. The need of the hour is to heed their advice and ensure strict compliance with rules.
Let us now move on to the financial markets. The bumper listing of Tata Technologies, which saw listing gains of over 100%, has put the spotlight back on primary markets. The segment has been abuzz with offers generating robust investor interest, even as secondary markets have turned sluggish since September. So did the lack of action in the secondary markets boost interest in primary markets? And will the momentum fade once secondary markets pick up the pace? Nikita Vasisht explores these questions in our next report.
Despite the secondary market's range-bound moves over the past 2 to 3 months, numerous companies have decided to raise funds from the primary markets. From mere 2 to 6 main board initial public offerings per month till August, the number of large companies raising funds via primary markets climbed to 13 in September and 10 in November. In fact, the months of September and October saw 66 IPOs, including SMEs, hitting the primary, while the number was 16 in November. And their decision has bear them fruits. Last week, Tata Technologies, Gandhar Oil Refinery, Fedbank Financial Services and Flair Writing Industries saw cumulative bid exceeding 2 trillion rupees. Among the lot, Tata Technologies garnered the most interest, with its share sale getting oversubscribed nearly 70 times, with cumulative bids surpassing 1.56 trillion rupees. So, has the dull market moves in the secondary market led to the heightened investors' interest in IPOs?
See, last 30 years, the bull run starts in secondary market and that is followed by IPO market. So as long as the bull run continues in the secondary market, this IPO boom will continue because secondary market is visible to all the investors in their eyes minute to minute. So when the boom starts, then that is followed by IPO.
The benchmark S&P BSE Sensex has leaped 17% from its 52-week low hit in March this year, while the Nifty 50 has zoomed 20%. The Nifty Midcap 100, however, has climbed 46% from its one-year low, while the Nifty Small Cap 100 has surged 63%. About 150 small and medium-sized companies have hit the primary market so far this calendar year, as against 49 main board IPOs. Going ahead, analysts expect the strong resilience of the Indian economy amid a turbulent global setup to keep the buzz in the primary markets intact.
Deep primary markets are very reflective of strong secondary markets. Indian economy has shown a very strong level of resilience in the most turbulent times. That is why I believe FPIs will continue to chase Indian IPOs from a growth-adjusted return perspective, even domestic mutual funds.
That said, Chokhalingam of Economics Research warns against a possible temporary halt in the momentum.
Even if Nifty Sensex go up, but if which overvaluation of small and mid cap gets corrected in the coming weeks, the IPOs will be impacted very badly because, as I said earlier also, 90-95% of the IPOs are from small and mid cap segments. Now, we are at a stage where the outperformance of small and mid cap is a lifetime record high level. So I firmly believe, I may be wrong, firmly believe that in few weeks or few months that will be corrected. When that happens, the IPO boom will come to a temporary halt.
Nervousness ahead of the general election outcome in 2024, volatile oil prices, asymmetrical global growth, and geopolitical tensions may also lower subscription numbers in the short to medium term, as investors may subscribe only to those IPOs where there is valuation comfort. Today, on 1st December, markets will react to the Q2 GDP numbers and await auto sales data and manufacturing PMI data for November.
He's making plans for an early retirement. Business Standard.
One of the fiercest proponents of free market economy and celebrated US diplomat Henry Kissinger died on Wednesday, November 29th. He was 100. What was it that gave him such a celebratory status? Find out in our next report.
Born in Bavaria, Germany in 1923, Henry Kissinger moved to the US with his family in 1938. He was drafted in the US Army in 1943 at the age of 19. He served in the Army in 1946. Later, he completed his graduation and master's from Harvard University. Although he was known to be close to Nelson Rockefeller, who went on to become Vice President of the US, Kissinger's political career on a global stage started in 1969, when Richard Nixon appointed him the National Security Advisor in 1969. In 1973, he was made the Secretary of State. Kissinger remained the most prominent voice on US foreign policy issues till 1977. His major diplomatic achievements involved China, the Soviet Union, Vietnam, and the West East. With respect to the Soviet Union, Kissinger shaped a policy of better relations with the communist superpower. It was known as the détente, a term for easing hostility between two countries. It led to the Strategic Arms Limitation Talks, or SALT, in 1969. He later helped negotiate the SALT I arms agreement with the Soviet Union in 1972. Kissinger also developed a rapprochement between the United States and the People's Republic of China. It was the first official US contact with the Asian nation since the Chinese communists had come to power. By thawing US relations with China and achieving détente with the Soviet Union, Kissinger achieved what was called triangular diplomacy. Exploiting a rift between the two communist countries, the Nixon administration drew China out of its diplomatic isolation and forced the Soviets to reshape their foreign policy. Kissinger was also known for his realpolitik doctrine. Under this, he believed that diplomacy and force should be used to achieve a balance of power. In 1973, Kissinger engineered peace between Israel and Egypt after the Yom Kippur War. Although he initially advocated a hardline policy in Vietnam and helped engineer the US bombing of Cambodia between 1969 and 70, Kissinger played a major role in the disengagement of US troops from South Vietnam. In 1972, Kissinger engaged in peace negotiations with Lee Duc-do. The peace treaty was announced on January 23, 1973. Kissinger shared the Nobel Peace Prize for Peace with Tho in 1973 for his efforts. Tho, however, refused the prize. Kissinger earned the wrath of many for supporting the bombing campaigns in Vietnam and Cambodia. Cambodia, a neutral nation governed by Prince Norodom Sihanouk at the time, was dragged into the Vietnam conflict. The US incursions spread the influence of Khmer Rouge, which would seize power in 1975. It then embarked on the genocide that killed almost 2 million people. Kissinger also backed the authoritarian regime of Chile's Augusto Pinochet. He was also criticized for turning a blind eye to genocide in East Timor in 1975 and Bangladesh in 1971. Kissinger established the pro-Pakistan policy in the India-Pakistan War of late 1971. He, along with Nixon, met India's then Prime Minister Indira Gandhi in 1971 before India intervened to end atrocities against the local population in Bangladesh, then known as East Pakistan. According to some tapes that were declassified later, Kissinger and Nixon said many derogatory things about Prime Minister Indira Gandhi as well as India. It is also believed that Kissinger came up with a plan to send a naval fleet to the Bay of Bengal during the war. Later, however, he changed his stance on Indira Gandhi, whom he would describe as the woman of extraordinary character.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Kissinger also earned two very conflicting distinctions in his lifetime, that of a warmonger and a Nobel Peace Prize winner. Well, that's all for today. For more news and analysis, please log into our website business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.